Stephen Donnelly is here, TD, joint leader of the Social Democrats. Thanks for coming in, Stephen.
Thanks, Declan.
You wrote about it yourself in the Sunday Indo. It's covered by the Sunday Business Post. You brought it up in the Dáil. This is about companies which seemingly, there seems to be billions going through their account, but they end up paying 250 quid in tax. Goodness me, we'd love to be all doing that ourselves. Tell us about these companies.
So these are the so-called vulture funds. I've been on this for a while. I've been raising it in the Dáil over the last few weeks. What you've got is any company that works in Ireland, East Coast Radio, any business person listening to this show right now in Wicklow, they're paying their taxes on their profits. That's how it works. Unless you're one of these so-called vulture funds, in which case it turns out you're not paying an awful lot of taxes on your profits.
But this is legal.
Yeah, apparently it is legal. So they're using something called Section 110 status. Section 110 was brought in 1997 to help attract something called securitisation business to Ireland. And the thinking was this: if you're a big international company and you're making your profits all over the world, but you need to bring them to a place to manage your assets, then the Irish state wouldn't tax you on them. So that was accepted.
They were earned abroad.
They were earned abroad.
And they were a holding sort of account.
Right.
You could divvy them up and blah. Yeah. Okay.
Now, the deal was, the legislation was quite loose. And the idea was, look, it would be policed. Rather than trying to create legislation that says, yeah, exactly this type of company or that type of company, they left it quite loose and said companies can apply to revenue and say, look, we're going to be Section 110. And then it was there's a political call and there's an official call to make to say, yes, you're fine or you're not fine. The vulture funds are making their profits in Ireland. These are like Mars Capital. There's people listening right now in Wicklow who will have got a letter back in, I think, 2014 saying your mortgage provider is no longer Irish Nationwide, it's now Mars Capital. Mars is just one example, but I'll use it to illustrate what's going on. So they bid for Irish Nationwide mortgages, and one tranche of them was 1,400 mortgages. They got them at nearly a 60% discount. So if you have a €300,000 mortgage, Mars essentially bought your mortgage for about 140,000 and is now saying to you, you still owe us the 300,000. Now, it turns out you can make an awful lot of money by doing that. So Mars, their own accounts show that for an investment of about €80 million, they're going to turn that, or they forecast they can turn that 80 million into 400 million. Now, here's how it's meant to work. That leaves 320 million in gross profits. Let's say it costs about 20 million to run the company. That would leave 300 million euro to be taxed. Now, as anyone in business listening right now,
75 million plus.
12.5% plus withholding tax. So actually you end up paying about 30% tax on your profits. So the 300 or so million that Mars could be making, let's say, the state would get 90 million in tax. Now, in their first year in their accounts, they showed revenues, so people paying their mortgages into them, of over 14 million. And in total, they paid in corporation tax €250. So then we looked at other firms. Again, these firms might have 20 million, 30 million coming in, total corporation tax €250. So there is huge tax avoidance going on here. I think it could be worth maybe 1 or 2 billion a year for the next 10 years.
Okay, how are they doing it?
They're doing it, they have applied for Section 110 status. So they've set up and they've informed the revenue that they're operating Section 110.
But the money is not coming from abroad, it's coming from Ireland.
Yeah, it's coming from Ireland. It's coming from families. And what's really frustrating...
But how are they given that section approval then?
I don't know, and that's why I'm calling for
full
investigation.
So it's not them. I mean, they're sitting happy. That's great. Thanks very much. But somebody who signed off.
Yeah, let's be clear. To the best of my knowledge, what they are doing is legal, right? The question is, how did they get it? How has this been allowed to happen? Now, I posed questions. I brought it up in Leaders' Questions. I wrote to the Minister and asked a bunch of questions, and they've essentially come back and said, we don't know anything about it, NAMA doesn't know anything about it, the IBRC doesn't know anything about it, the Department of Finance doesn't know anything about it, but we're going to look into it. Well, I'm sorry, but that's not good enough. This has been going on for several years. Now, I would find it extraordinary if no one in the Department of Finance knew about this, or no one in NAMA knows about it. I mean, for example, if you're bidding for a NAMA loan, you have to submit your legal structure to NAMA. You have to submit your passport to NAMA. Like, they get all sorts of details on you. Now, Minister Noonan came back last week and said, oh, sure, NAMA wouldn't even know. They don't even know who they're selling the stuff to. How would they know about the legal status? Well, that contradicts the testimony of people who've actually bid and said, well, of course we told NAMA that we were Section 110s. So there's really serious questions to be asked here. So what do we need to do? The first thing we need to do is we need to shut it down. And I think it can be shut down relatively easily. One of the things some of these companies are doing is using charities. It's part of the legal structure you set up under the Section 110. Now, Mars is owned by the Matheson Foundation. The Matheson Foundation is a children's charity. It's a real children's charity. It donates to the ISPCC, to Bernardo's, to Temple Street Children's Hospital. It also owns a so-called vulture fund. It's controlled by the Matheson law firm. The Matheson law firm are the solicitors to Mars Capital. So the charity regulator, I believe, should be writing out all of these charities and saying, you must divest yourself of shares that are held in companies that have nothing to do with your business. You must divest yourself or you'll be stripped of charitable status. Number one. And then I believe the revenue should be writing out every single Section 110 company and saying, if you are making your money in Ireland, and in particular for this, if you're making your money from mortgages and property investments in Ireland, and you move that money offshore using Section 110 status, well, from now on, we won't consider it tax avoidance anymore, which is legal. From now on, we will consider it tax evasion. I think that would shut it down very, very quickly.
Okay, but you're on the case.
I'm on the case, but a second thing we need to know, Declan, is we need a proper investigation. The government have said, oh yeah, sure, we'll ask people to look into it. No, I'm sorry, but this has been going on for years. So we need an investigation to say, who knew about this? And if you didn't know about this, how could you not have known about it? So very serious stuff. Large amounts of money to be taken back. It's happening right now. If we assume that there's $1 billion a year being lost, Declan, in taxes, we're talking 20 million a week. So time is of the essence. What is not acceptable is a 2-year probe, that comes back with the report that sits on a minister's desk.
Okay,
we need to act,
needs to be action on it. Very good. Stephen Donnelly, thanks for raising that, and you can read more in the Sunday papers. Stephen Donnelly from the Social Democrats. Thank you.